Good afternoon. We're doing it live in the 4 o'clock hour, doing more at 4, right after Ben Shapiro and just before the 790 KBC News Blitz with Randy Wang at 5. Doing more in 2024 at 4 in the afternoon. Can you believe it's the middle of April here? Mottek On Money, live on the air here, 790 KBC, streaming live online worldwide at kbc.com and the on-demand Mottek On Money podcast, kbc.com, Apple, iTunes, YouTube, and all your favorite podcast platforms. Stocks ending nearly flat today ahead of the big news expected tomorrow on inflation. We did see financial sector stocks pull back a bit. Investors await that key inflation reading, the Consumer Price Index. That'll be coming out first thing tomorrow morning. And we're also getting set for major banks to kick off earnings season later this week with the big names reporting. The S&P 500 did manage a closing gain of 7.5 points. The Dow was flat at, down just about 9 points. And the, almost flat, right? The NASDAQ composite edged up about 53 points to finish at 16,307. The tech-heavy index, the NASDAQ, has now climbed for 3 days in a row, has booked its largest 3-day percentage gain since March 22nd. Tomorrow we'll be getting the March Consumer Price Index that'll be coming out ahead of the opening bell tomorrow, expected to provide a monthly progress update on the Fed's efforts to curb still hotter than they want inflation. The price of gold, meanwhile, has hit a record high today. The price of oil, meanwhile, still hovering near its high point of the year. We'll be talking about that here shortly. The chip names, including the so-called Magnificent Seven, mixed performance today. The hot chip stocks declined. NVIDIA entering correction territory today. NVIDIA, the one that led the AI rally this past year, down about 2%, trading to end the day at $853 and change. And because it did finish below 855.02, according to Market Watch, it entered a correction, which is typically defined as those on Wall Street as a decline of between 10 and 20% from its most recent high. NVIDIA has joined Apple in correction territory. Apple hit that threshold last month with a close below $178 a share. Among the other names in the so-called Magnificent Seven, Tesla is in a bear market, which is defined as being down more than 20% from its most recent high. Alphabet, Google, meanwhile, hitting new highs today. We also saw Amazon move slightly higher, Meta slipping a bit, and Microsoft up slightly, all seeing their stocks near all-time highs. Alphabet, by the way, capturing some of Wall Street's fascination with the AI-linked chip stocks as its stocks cruise to a new high in the wake of an AI hardware announcement. Google previewing its new AXEL processors, which the company said are its first central processing units based on ARM Holdings architecture that are designed for data center use cases. They'll be available for customers of Google Cloud later this year. Google, by the way, Alphabet was the only member of the Magnificent Seven to see its stock end the day in record high territory. Big news on the local business scene. Much-loved actress and admired entrepreneur Jessica Alba, based here in Southern California, stepping down as chief creative officer at the Honest Company. That's the company she founded, the beauty and personal care company she founded, saying she wants to shift her creative energy to new endeavors. She will still have some involvement, though, remaining on the board at the Honest Company. Looks like Honest Company stock pulled back a bit today, down to 2.4% to $3.72 a share. Jessica Alba founded the company, by the way, in 2011 after failing to find personal care products made of clean ingredients, and for a long time served as chief creative officer and chair of the business, which later received a $200 million banking from a big supporter, and had the privilege of being there when she was honored by the Association for Corporate Growth of Los Angeles and also by the EY Group, the Entrepreneurs of the Year. She received that honor some years ago. Well, the price of gold, as I mentioned, hitting a record high today, and looks like it's been up for 7 straight sessions, hitting record highs on a winning streak. Joining us live now is AXEL MERK, the president and chief investment officer at MERK Investments, manager of the MERK Funds, founder of the firm bearing his name. AXEL MERK, an expert on macro trends, as well as an innovator in gold and currency investing. AXEL MERK, great to have you with us here this afternoon.
Great to be with you. Feel quite magnificent with all these magnificent names.
Absolutely. Well, it's about time. It's been a while since we've chatted behind live microphones, and of course, you famously have the MERK Gold Fund, and we want to talk about gold here, hitting record highs again today.
Yeah, no kidding. I mean, the one thing I like to point out to people is gold is not changing. It's the price of gold. It's the perception of gold. Gold hasn't changed in thousands of years. And so we got to figure out what's happening to the rest of the world, that suddenly gold is valued so much more highly. But one of the reasons we and many like gold is because it's the one constant.
Well, you, of course, we're ahead of the curve here. While people were looking at blockchains, you stuck with the gold chain, and look at this tremendous run up we've had here now. And of course, you know currencies and currency trader as well. And been a lot of talk in recent years about how crypto competes with gold. What are your thoughts about how things are playing out?
Well, they really serve different purposes in some ways, right? There's the whole spectrum of gold mining, by the way, as well, and then digital assets. Gold has a known risk profile. It has a known diversification profile. The sort of reasons why people buy it tend to be the same. Now, sometimes investors fade in and out. The one investor that's somewhat missing on the gold space is the speculator. The speculator jumps on a trend when it's great. Well, those folks have been chasing the meme stocks, the Magnificent Seven, and indeed also digital assets. And that's probably where the kind of the joint investor pool is, or sometimes joint investor pool is beginning and ending with digital assets. Digital assets are much more volatile much of the time. And people don't quite know yet what digital assets will be when they, quote unquote, grow up. Now, that, of course, doesn't mean that they can't zoom higher and be an amazing ride. But, of course, it also means that watch out below should they come down. And with hindsight, we'll all be smarter. I think what investors have to ask themselves, what are the goals in their portfolio and how can any one of these assets fit into the portfolio, and why is it that people are trying to look beyond stocks? And I think you pointed out earlier in the program, right, the Magnificent Seven is going up and up and up. Well, maybe you want to look at something else beyond that.
On there live with AXEL MERK, and you have the Van Eck MERK Gold Trust ETF, and this is one where people can actually hold the gold, right, through an exchange-traded product, an ETF. I remember when you started this, what was it, 10, 15, 20 years ago now?
2014, yes, and investors can buy the gold through the exchange and then take delivery if they choose to do so. It's the one gold ETF that's been gaining in assets steadily throughout the year, and whereas many others have had outflows, some have had inflows again, and it's that little differentiation that investors can take delivery of the gold, which tends to attract the more long-term investors. And so it's been growing steadily. It's over 900 million now, so we're not complaining.
Congratulations. You can actually take delivery of the physical gold product, so that is very interesting. And let me ask you this. So we're seeing gold at a record high here at last check of $7.20 to $2,369.60 an ounce, an all-time high for the price of gold. Silver, by the way, also hitting a new high for the year of 31 cents at $28.29, and platinum up nearly $7 to $9.90. This at a time when we're told inflation is supposedly easing. I guess we'll find out tomorrow when we get that inflation reading, but certainly gold historically has been an inflation hedge. What do you account for this rise in gold? Is it because of inflation, and what do you see ahead for the price of gold as well as on the inflation front?
Well, ultimately, I don't have a crystal ball like nobody does, but the way I try to explain it is that, yes, the Federal Reserve has gone beyond its higher for longer mantra, which they shifted in last October. Now, they haven't cut rates, but Fed Chair Powell seems to be reiterating that they're willing to cut rates, and that bias helps. And indeed, when inflation comes out tomorrow, it's not going to be at 2%. The Federal Reserve is satisfied when it's the survey is at 3.4%, and so that is not 2%. And so the question is, as they have an easing bias, are they more comfortable with inflation that's a tad higher? And it's all about perception, just like the price of gold is perception. The inflation may be coming down, but we also know it's not a linear process. And so people appear to be embracing gold as one way to diversify, also an environment, of course, where stocks aren't exactly cheap. But it's been quite stunning. And part of that buying has been from foreign central banks. Retail investors in the U.S. have been buying physical gold. less so the exchange traded products of late. But it's been quite a remarkable rise, yes.
On the air live with AXEL MERK, President and Chief Investment Officer of MERK Investments. Let me ask you this: some other factors certainly that have been widely reported, buying by other central banks, led by China, by the way, and even Costco apparently a big dealer in gold, which was also mentioned in some of the articles I've seen recently as driving up gold prices. If you did have a crystal ball, where do you see the price of gold going?
Well, it depends on whether the speculators are going to jump on it. If and when they do, then they could give the price of gold a significant boost. What I happen to think is that the foreign central bank buying will likely continue, in part because they are.
The countdown is on for the 2024 NFL Draft, presented by Bud Light, live from Detroit, and you can attend in person for free.
Welcome to the NFL Draft.
See the next NFL stars and experience the ultimate NFL fan festival, featuring live concerts, interactive games, player autographs, and more. The NFL Draft, presented by Bud Light, April 25th through 27th. Visit NFL.com/draft access to register for free entry today.
The Rolling Stone Music Now podcast gets inside the biggest stories with Rolling Stone's senior writer, Brian Hyatt.
Now here is my conversation with Jacob Knoll. Your story is an amazing one, and obviously you lost your dad when you were only 1 year old.
It was definitely a screwy way to grow up. I think that a lot of people never heard of who I am, and then they see me join this band, and they must think this kid must have just been handed everything, or nepotism kid. It's a gift that I have an opportunity to sing in such a big band like my father and my uncle's band, Sublime.
Rolling Stone Music Now, wherever you listen.
Incentivized, so to speak. The U.S. is increasingly willing to use financial sanctions to punish foreign governments that they don't like. And so while there aren't many alternatives or any alternatives to the dollar, on the margin, gold is one of the beneficiaries. And on the retail side, you mentioned Costco. It is a sign that gold is attractive to various people. We happen to see some people say, oh, it's always old people that buy gold and the young people buy digital assets and whatnot. We don't see that. We do see people of all ages buy gold, and part of it is, of course, on the other end of the spectrum. The fiscal picture in the U.S. doesn't look so great. Both parties are embracing spending. They just spend money, quote unquote, better than the other party. But at the end of the day, they are eroding the purchasing power of the dollar.
And you're a currency expert, too, and over decades we've discussed currencies, and it's been a while since we had a chance to do that with you. What do you see ahead for the dollar and the euro and the other major currencies?
Well, gold rising is, of course, a symptom of the dollar weakening. That said, gold has significantly outperformed all the major currencies. It's the shift in tone at the Fed towards an easing bias that makes a difference. The actual cutting may be less relevant, and that has caused a weakening bias on it. And then when we talk about the dollar, it's often versus the euro simply because in the traditional indices it carries such a huge weight. The Eurozone, of course, has its own set of challenges, and they may also be easing at some point later this year. But for the time being, the dollar continues to be quite strong, which, of course, at the other end of the spectrum means there's a lot of leeway for the dollar to ease down the road, to weaken versus other currencies. I happen to think that the rise of gold is like the canary in the coal mine that suggests that something is up there. And what it is, I don't have the crystal ball, but if I were a betting man, I would bet on the consumer. The consumer is 2/3 of the economy in the U.S., and the delinquencies have been rising. There are some headwinds. Maybe the trouble in commercial real estate aren't over yet. Indeed, the Federal Reserve is phasing out some of its programs to help the smaller banks. I'm not so sure whether they can actually do that in practice, but maybe the rise of gold and the somewhat weakening dollar right now is a sign of more easing to come.
I know you also wrote the book, Sustainable Wealth. You're also an economist. So zooming out to the bigger picture, all of last year, we were expecting a recession, and that didn't happen. What do you see ahead for this year?
Well, that's right. And I was somebody that prefers to embrace that notion. The role I see myself in is not that I have perfect foresight. I don't think anybody on your program, and certainly not I don't have that. But the role I can play is to look at risks and get people thinking whether they have considered those, whether they're significant enough. And as indicated, I think JP Morgan, Jamie Dimon, he just said that the market is pricing in 60 to 70% chance of a soft landing. He thinks it might be worse. It doesn't matter whether it's right or wrong. The question is, have you factored it in your decisions, in running a business or a portfolio allocation, and more specifically, in a soft landing scenario, equities, traditional equities tend to do quite well. In a hard landing scenario, the S&P tends to fall as earnings plunge and people have a more pessimistic outlook. And in some ways, the worse an economy is doing, the better precious metals can do, because they are more sensitive to what's happening in the reaction to on the monetary policy side. And the rise of gold suggests to me that at least some people think that this economy may be faring worse than expected. Now, if you look at the overall indicators, they seem to be just fine, that maybe the Fed is not going to cut so much. But that's, of course, also consistent with history. The market is rarely ever pricing in as many rate cuts as will actually happen down the road.
Very interesting. And of course, a lot of people follow the U.S. dollar Mexican peso exchange rate, and it looks like that's now at 16.30. Looks like the peso continuing a hot streak this week, appreciating to its strongest level against the dollar in almost 9 years. What do you make of that?
Well, I'm not the Mexican peso expert. I do look at it with some astonishment. I remember several years ago with the peso being much weaker. And the reason I start to chuckle here is because we have an election coming up, and who knows what sort of policies will be in place versus Mexico, and how vulnerable Mexico will be depending on who will be in the White House. And if indeed we do have a slowing economy, to what extent Mexico is going to be blamed for some of that. And so I will not dare to make a prediction here on the peso.
And certainly the Mexican economy is largely dependent on oil as well, which is, of course, near $100 a barrel again. So we are keeping an eye on that, and that could certainly be an important factor there. And the other currency that's been getting attention lately, the Japanese yen, right? And of course, we used to talk about the pegging of the Chinese exchange rate to the dollar. Anything else that's been catching your attention relating to the dollar?
Well, on the Japanese side, the Bank of Japan has given up its quote-unquote yield curve control, where they were trying to micromanage the entire yield curve, especially further out, which is historically something that would weaken a currency. That if you manage that, but when they said they give it up, they gave so many caveats that it's not exactly believable. And we'll have to see. The Japanese may finally get a little bit more inflation. The Japanese yen has been very weak, so it's certainly a candidate just on a mean reversion basis to strengthen. But it really depends on what the central bank is up to and how they will play it. Overall, there are a lot of things in the world right now that are quote unquote different from what they have been. And so traditional analysis doesn't always apply. I mentioned the Chinese buying gold. The broader context there is uncertain geopolitics. Historically, my argument would have been that if there's a crisis flaring up somewhere in the world, don't take it too seriously, because the market will get used to it. I think what has changed is that the long peaceful period we've had since World War II, at least on a relative basis, has been coming to an end. And what we see in Ukraine and in Gaza are just symptoms of a new era that we're in. And if that interpretation is correct, then that would be yet another reason why the price of gold may be higher for good reason for longer. And also we'll see more dislocations in the currency space as different countries may be affected.
Axel, thank you very much, as always, for your thoughtful analysis. It's always a pleasure to have you with us here, and look forward to many more conversations this year. Axel MERK, the President and Chief Investment Officer of MERK Investments, which includes the Van Eck MERK Gold Trust. The symbol on that one is OUNZ. Axel MERK, manager of the MERK Funds. Axel, thank you very much for taking the call here this afternoon.
Thank you. Have a good day. Bye-bye.
Thank you very much. Friends, if you're hurt in an accident, you need an experienced advocate, and Clark Fielding and a team of sharks at Fielding Law are on standby ready to dive into your case. Friend Clark the Shark is fearless for justice and your go-to attorney when injured in an accident that was not your fault. Whether it's a car accident, slip, trip, fall, or any kind of personal injury, Fielding Law is here to make sure you get the care, attention, and compensation you deserve. Fielding Law can assess the circumstances of the case, negotiate tenaciously with insurance companies, and if necessary, file a lawsuit and litigate to seek fair compensation on behalf of you, the injured party. An injury is a major disruption in your life. Medical expenses, lost wages, pain and suffering, property damage, and other losses incurred as a result of the injury are all part of the damages. Don't try and handle the process alone. You need an expert in the process, and the team at Fielding Law are the ones to trust. Put Clark Fielding's number in your phone under the word accident. That number is 833-88-SHARK, 833-88-SHARK, or go to clarkthesharklaw.com. Mottek On Money continues on 790 KBC. Good afternoon. Mixed finish for the stock market today, with the Dow down 9 points at the close at 38,884. The S&P 500 at 7.5 at 5,210. And the NASDAQ at 53 at 16,307. Market basically flat today ahead of the big inflation number, which we'll be getting first thing tomorrow morning, an hour ahead of the opening bell on Wall Street. That'll be the Consumer Price Index. And it might be coming in hot tomorrow based on what we've been seeing at the gas pump. Don't have to tell you about that. Gas prices up about 40 cents a gallon compared to just about a month ago, as the price of oil has surged to new highs for the year. Right now, up 7 cents at $85.30 a barrel for the price of oil. And taking a look at the yield on the 10-year note, it has eased a bit to 4.37%. Bond yields have been popping lately. That's the one that impacts the fixed-rate mortgage rates. Taking a look at the cryptos now, we see a Bitcoin up about 300 at 69,291. Ethereum up $1 at 3,515, and Doge at 19 cents. Gold, the star of the day again, hitting a record high for the past week. We've seen a string of record highs, and right now up $7.20 at $2,369.60 an ounce for an ounce of gold. Silver up 31 cents at $28.29, and platinum up $6.80 at $990.90 an ounce. NVIDIA stock, the one that led the AI rally last year, now in correction territory. That is at least 10% below its most recent all-time high. And NVIDIA shares closed down nearly $18 today, down to $8.53 and change. The magnificent one today on Wall Street, Alphabet Google, hitting a record high of $2 at $158.14. One big merger deal making news today. Kimberly-Clark selling its personal protective equipment business to AXEL for $640 million in cash, agreeing to a deal that the Australian company's chief executive said had been under consideration for years. He continues here in 790 KBC. Good afternoon. Tax day coming up fast, April 15th. Getting ready for that? Well, the highest income Americans pay a disproportionate share of income taxes and face the highest average tax rates across all federal taxes. But with a projected $2 trillion annual gap between revenue and spending over the next decade, it's unlikely to stay that way unless Congress cuts spending. Keeping track of all this for you is Adam MICHEL, Tax Policy Director at the Cato Institute.
Our house is a mess. Come on in. I'm Amber Wallen, internet comedian and host of your new favorite podcast, Fly on the Wall.
Okay, that's pretty presumptuous to assume that this is going to be their favorite podcast, by the way.
Anyway, that wasp that you just heard interrupt me is my husband.
And co-host, Benjamin Wallen.
Listen in as we discuss relationships and keeping our sweet baby kid alive.
Fly on the Wallen, wherever you listen.
Adam, thank you very much for coming to the line here this afternoon.
Thanks for having me back on.
All right, terrific. Well, tell us what we need to know based on a newly released report from the IRS, right, showing that the tax system remains highly progressive, has become more progressive over time, with the highest income Americans paying a disproportionate share of income taxes, face the highest average tax rates. Give us an update on what you saw in that last report.
Yeah, that's exactly right. The IRS released a new batch of data looking at the 2021 filing year, and they show that the income for the federal income tax, the top 1% of income earners pay about 46% of all income taxes. The top 10% pay about 76% of all income taxes, much more than their share of the income that they're earning, and those shares have increased over time, despite some of the rhetoric that you hear that the rich are paying smaller and smaller shares of taxes. that's just simply not borne out by the government data that they release on a yearly basis. This year, this most recent data shows that the top 1% share of all income taxes is actually the highest it's been since the 1980s when they started releasing this data.
Isn't that something? So what's coming down the pike here with this bipartisan tax bill that was passed last month, right? What are we expecting? Are we expecting chaos next year? Or what do you see ahead?
Yeah, you can always bet on chaos when it comes to Congress. This bipartisan bill that's waiting in the Senate, all it really does is kick the can a couple years down the road, lines up a couple more tax expiration dates, so that basically the entire tax code starts expiring at the end of 2025, raising taxes on Americans by about $400 billion a year. That's about $4 trillion over 10 years, which is the normal way that Washington calculates these things. It's the expiration of all those tax cuts that President Trump passed into law in 2017. And so if Congress doesn't act, taxes are going to go up on Americans, and it's going to be a big fight. It's going to be messy. When we have $2 trillion deficits, depending on who's in control, that share of taxes paid by the rich could go up even more.
Yep, sounds like you've been doing this for a while, as I have. I remember those Bush-era tax cuts, as they were called, and one of the TV newscasters, I guess, was caught by surprise when on the teleprompter, and she said it was the Bush-era tax cuts. But, yeah, Bush-era tax cuts, and then, of course, the Trump-era tax cuts to bring things even more current. What is the outlook for those Trump tax cuts as we head into next year?
Next year they will be in place in 2025, but in 2026 that's when tax rates increase. Just like when Bush passed his tax cuts and they weren't made permanent, Congress sort of continually extended them a couple of times for just a few years until there was a big bipartisan deal with Obama where a lot of the middle class tax cuts were extended and the top rates on high income earners were let to increase back up to where they were pre-Bush tax cuts. The danger is that's what will happen when the deal ultimately gets struck on these tax cuts, and the tax code is going to continue to rely more and more on just a few high-income Americans in a way that is just unsustainable in the long run. The tax code can't keep extracting a larger and larger share of taxes from a smaller and smaller number of people.
On the live with Adam Michel, the Director of Tax Policy Studies at the Cato Institute. And, of course, EVs have been getting a lot of attention lately. And obviously the government's been pushing electric vehicles with the tax incentives and so forth. And despite all that push, it looks like EV demand is waning, despite the fact that gas prices here in L.A. are up about 40 cents a gallon higher than just a month ago. What do you see ahead on that front? And has any thinking changed there in Congress related to tax incentives for EVs, or are we going to be seeing more of that?
Well, among Republicans, there's some skepticism of some of those tax credits. The most recent estimates of the sort of package of energy tax credits that were passed as part of the Inflation Reduction Act now cost about between $1 and $1.8 trillion over 10 years, depending on if they're made permanent. And so this bucket of subsidies in the tax code for various types of energy would be a great place for Congress to start pulling back some of the subsidies that have been handed out of the last couple of years and using some of those subsidy programs to help offset the cost of making a lot of these tax cuts that are expiring, the broad-based ones for everyone, permanent. And so these are the types of discussions that Congress is going to have over the next couple of years. Is what sort of junk in the tax code can be sunset, and what types of broad-based lower taxes can we keep for all Americans. That's ultimately the trade-off in any tax reform discussion. It's the base versus the rates, and that's the ultimate tension that Congress is going to have to play with over over the next several years.
And the other thing we've seen recently, and I know you've written about this too, the U.S. Now part of an international effort to rally behind a new global tax system that's been spearheaded by this group called the Organization for Economic Cooperation and Development, trying to increase taxes on international businesses. And this, of course, impacts American businesses. Remember, there was a big push years ago when a lot of American companies moved their headquarters to Ireland and all that. What do we need to know about this essentially global tax system that's being put together?
Yeah, this is a global tax cartel that the Biden administration and the OECD, based in Paris, are trying to get going. And it's actually, I think it's bigger than just taxes or corporate taxes. This is really about sort of governance and the role of the executive and President Biden. They've actually worked with these bureaucrats in Paris to go around Congress to rewrite domestic tax law in a way that is ultimately unconstitutional, in my view. And that should be concerning to every member of Congress and every American. Not to mention that they're constructing this international tax cartel as a way to increase taxes on American business and sell our tax base to Europe in a way that will actually make the U.S. Treasury bring in less revenue than they would otherwise. And so it's just a raw deal for sort of Americans at every level, including the U.S. government. And so I've been writing and encouraging Congress to reject the whole thing, to defund the OECD. We fund about 20% of their budget, and just say no to this Biden constructed international tax increase.
That is very big news. Thank you for staying on top of all this. On behalf of all of us taxpayers here, Adam MICHEL, Director of Tax Policies at the Cato Institute. Thank you very much for joining us live here on Mottek On Money on 790 KABC. Mottek On Money continues here on 790 KABC. Good afternoon. Turning now to a hot topic these days, commercial real estate. And joining us live now, Jerry Sullivan, National Managing Editor of the authoritative commercial real estate site, The Real Deal. Jerry, great to have you with us here. Thanks for taking the call this afternoon.
Oh, it's my pleasure, Frank. Good to be with you.
Likewise, thank you very much. And first of all, give us an update here on how commercial real estate is looking in Los Angeles from your vantage point.
Well, and let's talk about the office sector as sort of the broad midsection of the commercial marketplace. And it's not doing well in Los Angeles, as we've discussed before. Savills just came out with a report. The availability rate on office for the broad LA region is at about 28% right now. So that's the vacancy rate, and then the rest of the space that is known to be coming onto market soon, the availability rate. And so that's a tough number. There's some bright spots. I think Burbank, Century City is doing well, but places like downtown LA and other traditional office centers they're still struggling, and there's not a lot of good news to talk about in that regard.
And certainly this measure ULA, which was sold to the voters as a so-called mansion tax, but it turns out it's created a very big chill here, as you well know, in the world of commercial real estate. This measure ULA, which was supposed to help the homeless here in Los Angeles, has come up well short of expectations because of the chilling effect it's had on real estate, big real estate transactions. And now it looks like, according to The Real Deal here, Jerry, I see that measure ULA challenge lands now in a federal appeals court. The court appeal claims voters were misled by ULA's so-called mansion tax label. Looks like this is going to another court for review. Can you give us an update on that front?
Yeah, Frank. It's at the Ninth Circuit is hearing the appeal on this, and it's Newcastle Courtyards LLC has challenged it originally with the Howard Jarvis Taxpayers Association, I believe, and they lost their case, but now the federal court has decided to hear the appeal. And the basis of the appeal is that, or the case that they're bringing is that the so-called mansion tax was not a mansion tax. It was, extended on to commercial property, as you've described, and it was not presented that way. And essentially, the case essentially says that the proponents of the tax hoodwinked the voters. And it's interesting that even some of our coverage has been submitted as documentation in the case. And a story we did about Nithya Raman, the Los Angeles city council person who was a big backer of it, who gave an interview recently with the Chicago Tribune, essentially talking about how one of the ways they passed it was to push it as a mansion tax, meaning, oh, here's a tax on the private homes, single-family homes, or homes of the very wealthy, very high-priced, $5 million, $4 million, or $5 million and more. When indeed, it did extend well beyond that into the commercial sector. And you mentioned it's inhibited deals. That's true, but it also is inhibiting development. And so, just at a point when Los Angeles could really use more housing, more apartments, multifamily developers, this is really hitting them and making them rethink any projects in Los Angeles. So it's a very serious matter. We'll see if the appeal, gets anywhere, but it's certainly worth tracking.
Certainly, and I want the people to know that I'm on the air with Jerry Sullivan, National Managing Editor of The Real Deal, the authoritative commercial real estate site. And Jerry knows this area very well, having been the editor of the Los Angeles Business Journal and the Orange County Business Journal for many years as well. So you know what's going on here thoroughly, Jerry, and it's always great to have you with us here. Now, another big story I see that The Real Deal is covering is despite developer doubts, the Los Angeles mayor wants to make something called ED1 permanent. Karen Bass pushing to fast-track affordable housing, but builders say these projects don't pencil. This at a time when government spending on homeless programs is being scrutinized very, very thoroughly. Tell us what we need to know about that.
And there's an ED1 is a directive for the mayor's office, essentially seeking to cut red tape on the development of affordable housing. And I think there's just a good deal of skepticism about it. It's been in place as a directive from the mayor on an interim basis, and the mayor is now seeking to make it a permanent codified part of the local law or code. And so we'll see where that goes. You get a little lost in these things, and I think everyone would do well to pay attention to some of the language they use, because you'll hear a lot about proposed units and units, that have been proposed or approved, but we've yet to really get any real good read on what's actually been built. And
you kept a close watch on this under Garcetti. You had watched those warehouses that were supposedly designated for homeless housing, right? And that caught your attention already some years ago. So tell us more about, just based on what you've seen in the past, on how government money is being spent for supposedly this purpose.
Well, yeah, and different administration, different instance, and I think you're referring to the warehouse on Paloma Street in downtown LA that was chosen to be converted into a homeless shelter, and eventually it was, but it was with a really inexplicably high lease rate paid to a landlord there, and took an inexplicably long time, and there were all sorts of what appeared to be conflicts of interest involved on the way. It was just kind of a prime example of how these programs, I think, can get misused and are prone to abuse. And so, a different administration, but I'm not so sure I see any sweeping change on any of this stuff.
Yeah. Let me ask you this. We have a few more seconds left. Got to ask you about the graffiti towers, that ocean-wide project. Any updates on that one in the heart of downtown L.A.?
Not much. I do notice it's gone quiet. I don't see any city officials standing up and telling us what's next for that. They sort of got their headlines with, we're going to build the developer to pay for the graffiti removal. Maybe they've sent the bill somewhere. I don't know if anyone's collected it, and I haven't seen much in the way of follow-up. So that remains an eyesore on the city skyline. I was by there recently, and it's not looking good. So we'll, I know you've been watching that one, so keep track of it.
I drive by there all the time, so we'll keep you posted, Jerry, and look forward to our next conversation. You always appreciate your updates. Jerry Sullivan, National Managing Editor of The Real Deal, the authoritative commercial real estate site. Jerry, thanks very much for joining us live here. Mottek on Money on 790 KBC. Stay tuned now for the 790 KBC News Blitz with Randy Wang right here, 790 KBC.
When you have sports mixed with your pop culture, along with humor and celebrity interviews, your earbuds are enjoying The Rich Eisen Show.
Kevin Millar, we're all paying rent in Ohtani's world, right?
And the Dodgers world. Game is healthy, game is good. And, I get asked a lot, is that good for baseball? Yeah, it's good for baseball. This is definitely the team to beat, because that should be your next correction, Richie, is this World Series a bust for the Dodgers and Dave Roberts?
Hell yeah. Search for The Rich Eisen Show on YouTube or wherever you listen.